Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo Daoud, and today's guest, or the returning guest, is Dan Collins. He is the founder and editor of the China Money Report. Dan is a returning guest. He's the guy that we go to if we want to find out what's going on in China, and there's a lot of stuff going on in China right now. So, Dan, thank you for joining me.
Thanks, Mo. Thanks. Good to be back.
But Dan, there's a lot of stuff going on in China right now. For the past 2 months, it seems like a lot of bad news coming out of China. So I want to start off by talking about what's going on with the currency. Now, the China Yuan was down a record 1.9% yesterday, August 11th, and down another 1% today on August 12th. What do you think the Chinese central planners are trying to accomplish by doing this? What do you think they're trying to do?
Well, the depreciation over the last 2 days is part of the IMF getting prepared for that inclusion in the IMF, the SDR. They're trying to bring the currency to be more convertible. You know, it's quite interesting. The U.S. government has been pushing China for years to float the RMB to make it more marketable, to make it more market-based, and then when they do it, it kind of shocks global markets. The RMB, though, I look at it from in terms of over the last year, it's appreciated though significantly against most major currencies. There's a lot of talk today about China started the currency wars. Well, it hasn't been China that started this. I mean, Japan destroyed their yen from 80 to roughly around 125 right now. You know, making a Toyota 40% cheaper in the United States than it used to be. So our typical so-called allies, Japan and Korea, have totally started to debase their currencies again. There is a currency war going on, but it's not China. China has relatively kept the renminbi stable, meaning it's appreciated over 20% against most of its competitors in the countries that still manufacture. That's definitely not the United States. But, that's where we are today. Now, China, I think the economy overall is absolutely very weak. You probably have 0 to 2% real GDP growth relative to, government numbers of 7%. So it is very weak, but they're still running, we had a record $60 billion trade surplus in 1 month, a few months ago, and they're probably going to do more than $500 billion in trade surplus this year. So there's no time to push the panic button on China. We had basically 2% devaluation and a 1% devaluation. These are very small issues, relatively speaking, in daily moves in global currency markets. But because China is such a juggernaut now, I think that it really spooked the markets when they started to move on the currency.
Oh, so you don't think the devaluation had anything to do with the sluggish economy or the fact that the stock market is in a downslide? It has to do with trying to make their currency more marketable, not that they're trying to join the SDR.
Well, it's mostly involved with trying to make it more market-based to get into the SDR basket, but there is absolutely some pressure coming on the real economy. You know, their latest data with the trade numbers were pretty weak. And I think they're trying to get ahead of the Federal Reserve with their rate hikes. They're trying to release a little pressure on the RMB because versus Japan, the RMB's up 25-30%. Versus Korea, it's up, 15-20%. Versus all these countries in Asia, the renminbi has skyrocketed. So I think part of the devaluation was a little bit to relieve some of that pressure.
And right, and what they're doing is not something that's foreign. People are acting like what they're doing is a complete shock. I mean, the U.S. government and the Federal Reserve did that 7 years ago when they lowered interest rate to almost zero and tried to print money out of thin air to prop up the stock market and to stimulate their export market. So the currency war started years ago, and China is not the one that started it. I agree with you there, but they certainly heated up the currency war a little bit with what they've done lately.
Yeah, the problem with the U.S. Policy was that when they try to stimulate exports, they forgot they don't manufacture anything anymore. And it's a financial printing press economy, and our main exports are soybeans and scrap paper and scrap steel to China. Meanwhile, we have vehicles coming in, solar panels coming in, computers, basically any kind of high-tech good you can think of we're now reliant to import. Not to mention almost every durable consumer good you can imagine is now imported. So.
They're also good at exporting inflation as well. So, because whatever they print here and whoever it's pegged to the U.S. dollar, they have to maintain it. So they're also exporting their inflation.
Sure. And a lot of the real economies, like China, a lot of these, they've experienced rapid inflation. It's not more than a year and a half ago, India had 10% inflation. China had double-digit inflation for years, a couple years ago. So there's absolutely exporting of inflation. But in a real economy standpoint, China is absolutely very slow. But the basis, you still have rising wages at the bottom tier. You still have very low real unemployment. So we compare this to countries in the West, Italy, Spain, 40-50% youth unemployment. United States, 100 million people with of working age that aren't working. These are dire numbers that the U.S. and Europe are going to have to come to grips with.
Yeah, that's a great point. And the wages in China are increasing in double digit, and we're also starting to see a increase in the age population of the workforce in China. And from what I'm reading, they look like they're replacing these people with robotics. But that's something we can discuss later in the podcast. But I want to shift gears here and talk about financial repression. Now, that's something that the U.S. government and the Federal Reserve is doing as well, which is financial repression. Do you think China will implement a financial repression like what the U.S. government and the Federal Reserve had done with the U.S. economy, or do you think have they done it already?
Well, the lending, People's Bank of China lending rates are not at zero. They're at a roughly 5%, 5.5%. So that means a loan in China for a firm, industrial firm, they're still paying 8% to get a loan. Chinese saver, someone with capital, which there's over $60 trillion in capital there now in private savings and checking accounts. They're getting 5.5% fixed rates on their deposit. So they're actually getting something for their money, not like the United States where somehow money has become useless and of no value to the banks because you actually get less than 0% when you factor in all the fees and things you pay. So yeah, you get lots of ways of repression in China. Fortunately, financial repression is not one of them yet, but it wouldn't surprise me if it comes someday.
Yeah, it seems like that's the next step in government intervention in the economies. First, they lower the interest rate and print lots of money. The next step is financial repression, which is when they keep the borrowing cost for the government low so they can continue to run up a big budget deficit and continue to spend and borrow and try to, stimulate the economy. So that's something that Japan's also doing as well. So I think China is well on their way to doing that too.
Yeah, absolutely. There's, anytime the government's running into trouble, the printing presses get cranked up. China's no different in that. When the property market slowed down a few years ago, the local governments used to get most of their revenue from the local property sales, and when they were selling the land, and then that kind of just stopped. All of a sudden, the local governments had to start ringing up big debts to the central governments to pay for all these infrastructure projects to ratchet up GDP. This was all, positive upward cycle. But then when the new premier came in, he stopped all that, and they knew they could not continue to grow at these kind of rates. You can't grow a $10 trillion economy at 12%. That's like adding a new $1 trillion of GDP every year. So the whole growth model in China has started to change. And I think what investors and listeners need to understand on China is that you're really dealing with two Chinas now. You've got an old China and a new China. Your old China are the big infrastructure plays, your steel, your cement makers. These guys are plagued by overcapacity, low profits. Most are state-owned. But then you have the new China. You have the Alibabas, the Tencents, the Xiaomis. These guys are very creative, innovative. Alibaba's still growing 40%. These guys are moving even ahead of their competitors in the U.S. and the types of services they offer. I mean, they're going into banking and wealth management services, and Alipay is pay with your phone is way ahead in China than Apple Pay is. So there's a lot of kind of new plays in the kind of new China as they try to transition the economy from the old fixed asset investment and export type model into the new, more consumer driven model.
So I also want to talk about the stock market in China. Now, this past summer, the stock market in China has gone down in double digits in June and also in July. I just want to get your thoughts on that, on how the stock market downfall affected the Main Street in China.
Yeah, the Main Street really took it without blinking. So I'll give a background on the stock market. Today we're at roughly the Shanghai Composite around 3,886. People need to keep in mind the average is usually 1,758 over the last 8 years. So what happened is the market shot up more than 150%. You had a lot of retail investors start throwing money into it. The money went from property into stocks, and then the smart money pulled out and it crashed. And the crash was really epic. I mean, in July of this year, it lost over a third of its value. I mean, that would be like the Dow losing, 6,000-7,000 points in a month, in 3 weeks. So it was an epic crash. But really, this, representing over, I believe, $2 trillion that went into the market and then went right back out. But what was interesting is that what people didn't report is the economy took it without even blinking. Those kind of money flows of $2 trillion, I mean, that would have collapsed most countries on earth to see that kind of money leave the stock market so quickly. But things went on. The government put a lot of efforts into backstopping it. The banks came to the rescue. 4 of the 5 of the world's largest banks are Chinese banks. 4 of those banks are making still over $20 billion a year each. And they put in together a combined $200 billion. Mutual funds put in money. The government basically directed a rescue to stabilize the market. They didn't want to see anything go up too high too fast, but they couldn't control it. And then they've stepped in now to put a backstop under it. And they're still targeting it to be roughly 15 to 20% higher than where it is now. It's still slightly up year over year, so it hasn't totally collapsed. It was just a bubble, and then it popped real fast.
I read on Zerohead that the Chinese government gave away $6 trillion to investment firm and brokerage to buy stock in the stock market in an effort to try to stop the bleeding in the stock market. And they also banned short selling as well. And I heard they threatened to arrest anybody that sold any of their stock in the stock market. I don't know if that's true or not, but it shows you that the Chinese government basically nationalized their stock market.
Yeah, they did ban short selling because they believe there were a group of big investors that were behind crashing the market. They halted 1,400 trading companies. They did give more money into the sovereign wealth fund to buy more stocks. So not to private firms or different firms, but yeah, they're pulling out all the stops basically to backstop the market. But so far it seems it's stabilized.
So I want to talk about the gold and silver demand in China. Now, a couple months ago, China released their total number of gold that they have in the vault, and wasn't no surprise to me that they, I think, underreported what they have in the gold results. They reported that they have about 1,658 tons, up from 2009, which the last time they reported was 1,054 tons. To me, I think they have a lot more than that, but I think they're just trying to underreport it to keep the gold price low so they can continue to accumulate. So I want to get your thought on that.
Yeah, it's absolutely. So where they're hiding their gold, China's made a massive play on physical gold the last 7-8 years. Now, where the gold is held, it's not held at the central bank. That's why the reserves have only gone up 600 tons. So to recap, and we've talked about this before, but China produces 400 tons every year. None of that leaves the country, and they're also the world's largest gold importers. So if you add all those numbers up, I mean, the numbers of gold in China are over 6,000 tons. But it's not it's not being held by the central bank. It's being held by state-owned banks and by the citizens. So, as I may have talked on the show before, you can go to any bank branch in China, and they're selling gold and silver bars. You can keep it physical at the bank. You can take it home physical. You can keep your RMB in gold, and you can change it online between gold and RMB. This is they've been pushing gold and silver for at least 7-8 years, maybe 10, more than 10. And there's all this new gold that's been dug out of the ground. And it's not much, but everything that gets dug up in China and outside China, going into China, it hasn't left. It's there.
So how much do you think they have in the vault?
Like I said, the People's Bank of China is what's reporting how much. That's the central bank. They're only reporting the 1,600 some ton. That's probably true. But there have more than 6,000 tons between the state-owned banks, sovereign wealth fund, these types of players, and including the Chinese population.
Right. That's a lot of gold there.
Yeah, that's huge. That would make them the second largest gold holdings in the world, which is probably more accurate.
Right. So, from the recent meltdown in the economy in China, are the Chinese flocking to hard assets such as silver and gold? Are you seeing longer lying at the jewelry store or the bullion shop in China?
Not necessarily. It's cooled off the last couple of years. We've seen demand. It was really hot for a while. In fact, a personal story I can tell you. We have a silver place I used to buy silver from, connected with the bank. They told me a guy in a truck came and picked up, I don't know how much silver, but it filled the back of a whole pickup type truck. And he had ordered it. It took 3, 4, 5 months to get to him. But so I'm not seeing that kind of demand as it was 2, 3 years ago. But if this current devaluation last couple of days, as the Chinese currency goes down, gold and silver is going up for Chinese. So it's we could see new interest, at any time.
I want to talk about the effect the Chinese economy is having on the global economy, such as the U.S. and Europe. How will the China meltdown affect the global economy, and how do you think the Federal Reserve will react? I'm already hearing politicians complaining about Chinese government manipulating their own currency, which is hypocritical because the U.S. government is manipulating the U.S. dollar every day as we speak.
Yeah, as I kind of mentioned at the beginning of the program, the other countries, the other manufacturing companies in the world, your Japans, your Koreas, your Chinas, have manipulated their currencies for decades. And in turn, it basically took away our manufacturing base. That's why we have an entire rust belt of unemployed people right now, or underemployed people. In response now, since the crash of 2008, we are printing money just hand over fists. And so we're manipulating our currency as well. So basically you have the total debasement of fiat currencies. So that's basically what we need to prepare for at the end of this game. What happens? My personal opinion is the renminbi will replace the dollar as the main de facto reserve currency over time. Oil sales already are quickly shifting into RMB. Russia's selling oil in RMB to China. Iran's going to sell oil to China in renminbi. The U.S. is importing less and less oil every year, so the global oil trade will be converted to RMB, and that's what created King Dollar to start with, was that it's backed by oil. Well, soon those oil flows are going to be in RMB. The use of the RMB in global transactions is increasing every year. It was 0% 3-4 years ago. It's up to 20% now with trade with China in between it. But China's actively trying to trade that's move their consumer goods trade accounts into renminbi. They want to get the renminbi in the SDR basket. It's being held in central banks now all over the world: Malaysia, Nigeria, Brazil, Argentina, Korea. It's just a matter of time before the renminbi becomes the second most powerful currency. And then you quickly start to look at, hey, well, this renminbi is backed by China's huge manufacturing base and exports, and the U.S. dollar is backed by what again? I don't know. It's just printing. So That's what'll happen.
Yeah, backed by nothing.
Yep.
Thin air. Um, so it seems like the Chinese government and the U.S. government have sort of changed the dynamic of the relationship, because we're seeing China partner up with other countries like such as Russia and Iran to make oil deals. Do you think the relationship between China and the U.S. has changed over the past few years due to the currency war?
Well, from a geopolitical standpoint, it's gotten much worse. China's become much more aggressive in the South China Sea, East China Sea. The United States is going now to Vietnam, Philippines, Malaysia. We're trying to create a ring around China, like we've created a ring around Russia. We want to pick a fight with Russia, and now we want to pick a fight with China. Well, that's the bizarre thing. The Pentagon planners are setting up. That's the whole shift to Asian pivot strategy. But at the same time, business is still going full guns with China. I mean, General Motors sold 2.8 million cars in the United States last year, and they sold 3.9 million in China. So, I mean, corporate America is highly dependent now on the Chinese consumer. China will replace the United States as the world's largest importer in only a few years. You know, they're importing over $2 trillion worth of goods now. So China is about to regain its status again as kingdom, the most important country on earth. Half the world's steel, half the world's cement, half the world's copper, everything, it's China is the absolute most crucial country now, economically speaking. And that's what it's going to usher in the RMB as the new currency.
I don't know if you ever saw a map of all the military bases, the U.S. military bases around the world, but it's all located around Russia and around China.
Yeah, absolutely. So we're going to continue to borrow money from China so that we can ring air bases around them. But yeah, the Asian pivot, I think we've just said 50% of our naval assets will be in Asia, or to counter China. 50% of our Air Force assets. But we're really at this illusion stage to where we actually have money to pay for all this. And their Chinese military is just making leaps and bounds every year. I mean, for every sub we have in Asia, they have 30. So I mean, it's just the aircraft, the carrier missile, killer missile they have. I mean, some of the advanced technology, the stealth fighters that they have. Whereas U.S., we are affected. Even our military now has become affected by this inflation type of poor manufacturing. Our old fighter jets used to cost $200 million a piece. Now they're $2 billion a piece. And they don't work. The F-35. Most of our allies don't want to buy them. They say they can't fight, they can't run. They're going to be knocked out of the sky like baby seals. That's what the Australia defense minister said. So yeah, we got the whole relationship with China and how the U.S. handles it is going to determine everything for the world, going forward.
And one of the reasons why U.S. got off the gold standard is so they can go into wars and print as much money as they want. So they started all these wars. You should notice they started all these wars after they got off the gold standard that should never happen. Like the Vietnam War.
If you have to pay for the war, you're not going to go to war. And that's why we since we got off the gold standard, we've just been at war all the time.
Yeah, look at all the wars we've been into, which I thought was completely unnecessary. Vietnam.
Yeah, that's why we got off the gold standard with Vietnam. So.
Yeah, Korea, and then Iraq, and then we got Syria, and then Libya. It's just a mess. So anyway, I want to talk about, I mentioned it earlier about robotics, and we talked about it in previous podcasts. I just want to get an update for our listeners on how that's going in China. I just want to get your insight on the rise of robotics in China, because we're seeing increasing wages in China year over year. I'm seeing double-digit increases in wages, and then also we have a declining age population and a rising age population in the workforce in China, and so it's getting hard to replace that.
Yes.
So I'm hearing that they are replacing them with robotics. So
absolutely. Yeah, there's a heavy automation push in China. As you mentioned, the wages are up dramatically. When I moved to China in the late 90s, you had literally an unlimited supply of labor at $100 a month. They would live in your dorm room for $100 and work 12 hours a day for $100 a month. Now, no problem for them to find a job $700-800 a month, $900 a month. I mean, it's jumped up that much. And if you'd have said back then, when I came to China, that China would run out of labor someday, we'd have thought you were crazy. We just wouldn't have believed it. But it actually happened. A lot of demographics are at play. One-child policy, like you said. A lot of one-child, kids. Their parents don't want them to go to some foreign city and work in a factory, live in a dorm. And now these young kids are coming up. They used to graduate 5% of the people used to graduate college. Now it's 40%. If you look at a place like Taiwan, it's 99% of the people get college degrees. So China's going to do the same thing. They're very culturally education focused. There's not going to be anyone to work in these factories. So, they're either going to have to automate, and then a lot are going to be pushed offshore, which is good news for some countries like Vietnam that can absorb some of that excess labor. But there's a heavy drive to automate right now, and you see a lot of companies going into industrial automation to try to become more efficient.
And that's interesting insight. We're also seeing that here too, with increasing pressure on raising minimum wage here to $10 and $15, which is starting to see a lot of negative effects. If you look at Seattle, which is hurting right now from that $15 minimum wage policy that they implemented. So the rise is robotic is here to stay, I think. The one final question before I let you go is a couple months ago I had a guest from China, Jeff Brown, and I asked him a question about the social issue that's going on in China, and he said that the U.S. media is blowing that out of proportion, and that the Chinese government are actually respond better to the people in China on problems and try to solve problems, and that the only social problem in China right now is the water pollution and the air pollution. So I want to get your thought on the social problem in China. Has it improved? Has it gotten worse? Or has it been the same?
You have, I would also rank pollution as the number one issue. It's really frustrating for people. I mean, when you can't see more than 10 feet in the sky every day because of pollution, it's really bad. Other than that, there's constant local issues. There's been a lot of protests over new chemical plants will go into a town, and the whole town will come out and protest it because they don't want it near them. So the people have become cognizant about those issues. The next to pollution, the biggest social issue would be domestic terrorism with the Islamic population. So the far western province, Xinjiang, is a Muslim province, and they are committing terrorist acts all over the country. They'll go to a train station and 4 guys will pull out machetes and just start slashing people. That's happened 3-4 times. So that's probably their number 2 issue. In terms of the general population, you won't see any major social disruptions. China's it's a lot more chaotic than Japan, but unless there won't be any kind of revolutionary revolts unless they're not eating. That's the history of China. They usually suffer with the best of them, so to speak.
Okay. So overall, your feeling and thought about the China economy right now, you think it's just a bump on the road, or just something that this downturn in the economy is something that we should keep our eye on?
We have to keep in mind that China just built 30 new New York cities in the last decade. 70 new international airports were under construction at one time. They just went from no high-speed rail to 5 times the amount of high-speed rail than any other country has. So
we don't have one. We don't have any of that in the U.S.
No, I know. Azerbaijan's getting high-speed rail, but U.S. doesn't have it. There's been massive. What we're going through now is, and we could go through this for 5 years where China's flat, but we have to look at the underlying trends. Is still people are getting more educated, businesses are still getting set up. Supply chains are still getting more efficient. Computer, automation, like we talked about, is getting put in place. The real things of the economy are continuing to move because the system is set up right. United States, 40%, 38% federal tax on corporations. Nobody's setting up jobs. They're all staying outside the United States. Until we get those things fixed, China's still going to, keep running circles around us.
All right. Well, Dan, thank you for your time. I appreciate it. If people want to find out more about what you do, where can they go?
They can find me at thechinamoneyreport.com.
All right, Dan. Well, thank you, and come back on again to give us another update in China.
Thanks, Mo. Appreciate it. Talk to you soon.